Hi everyone, let's cover my Elliott Wave scenarios on Bitcoin, starting with the bearish scenario, which is a zigzag to the upside, a wave A, B, and a wave C. Most common target for your wave C is between 94.6k to 98.4k, and an extended target would be 102.8k. Inside wave C, we need to be able to count a 5-wave structure, 1, 2, 3, 4, maybe another high in a wave 5. Alternatively, your wave C might already be finished, and this structure here could be the beginning of a bigger corrective structure. Now, an ABC zigzag can then lead into a bigger corrective structure, which you have to be aware of. So this is a diagonal 5-wave structure in a wave A, followed by a WXY double zigzag. So your wave W internally is your simple zigzag A, B, C, where C is either finished or you look for one more high to finish your wave C. Then you get your wave X to the downside, followed by another zigzag ABC in a wave Y. Now, preferably, your wave Y is going to move beyond 100k, and that is mainly because of the emotional impact, I suppose, it will likely have on the market, where people will start buying, thinking about all-time highs, want to trade the breakout and all that sort of stuff. But in this scenario, it adds to the liquidity of moving price towards the downside. Now, the reason why, preferably in a bearish scenario, I would still look for higher prices in a wave Y to come after a W is finished is because this wave W is very short in time compared to the move to the downside. So if you take a fib time from the start to the end of your wave A, you double click and you toggle on the 0.382, then preferably your wave B in a bearish scenario would finish at least after the 0.382, which currently over here, of course, we're ranging before the 0.382, not after the 382. And it is at the moment quite unlikely that an ABC to the upside would finish after the 382, which is positioned on the 6th of May. So therefore, it would be better if you get a bigger corrective structure in your wave B, and a double zigzag is simply very interesting because you'd move probably above 100k, get some emotional volatility on the chart as well, besides the fact that wave C inside wave Y can be a high volume move towards the upside. So it can like mimic a potential breakout, but then it turns around, right? And it moves towards the downside, followed by a couple of 1-2s, bit of a grind, quick move to the downside, and then followed by a bit of a grind. Minimum target for this wave C is taking out the low of your wave A. And then we look at the bullish scenario, which actually interestingly has quite a similar movement in price. So you have a finished corrective structure at the low, 74,420. And then we move towards the upside. Now, in this case, you then count this as a 5-wave impulsive structure in a wave 1. Preferably also here still look for another high at least. Followed then by wave 2. And then you look for a couple of 1-2s. And then you get your big 3 towards the upside. Now, the common target for a wave 2 is the 0.5 to the 0.786 fib taken from the start to the end of wave 1. Of course, in this case, we don't yet exactly know where the end of wave 1 is going to be, but I pulled these fibs from the low to around 96, 98k, and then it would give you like a target of 86 to 79 as a common target area, and a uncommon target, but still a target, is the 0.382. It generally is a minimum target for a wave 2, which brings me to what you see here on the left, which is wave 2 only touching the 0.236, which is incredibly rare for a wave 2, does affect the probabilities of this move to the upside being an impulse compared to a zigzag structure. Now, your most alternative count, which I didn't put on the chart because at the moment it's not relevant to me, but an alternative structure would be that this is a wave 1, 2, and you look for another 1, 2, and then a big 3 towards the upside. Just doesn't have the highest probabilities at the moment. It's fun to keep in mind, but it is not really something that at the moment I'm looking for. But it does mean that if you move towards the upside and look for the resistance areas that we have towards the upside, it is always important to observe the reaction. Now, these are the levels I have on my chart, so you can copy them if you wish to. Close to price, we have a bit of support, daily naked point of control, 91.6 and 90k point of control. To the upside, some levels of resistance. You can see the blue box as well, my target box, which is nicely respected with this high over here. And then the weekend hit, of course, creating a range. Above the box, we have this area here, 98.2, and then we basically get to the following two boxes, the one over here around 102 and then around 104. So you can see we do have some resistances to the upside, and these are very interesting to me to look for a turnaround. Now, locally, this move towards the downside counts best as a corrective structure to the downside, which means that in general, probabilities are higher to still take out this high, unrelated to the future price action over here, because you can count WXY or an ABC in here. It's low time frame counting, not too interested in that. But if you would count this as a WXY, you would look for the high. There's also maybe a way to count this as some sort of a wave A, sideways B, and then a wave C. And an ABC can lead to a bigger corrective structure, right? An ABC can lead to a triangle structure, a sideways WXY, a WXY double zigzag to the downside. However, a double zigzag does lower in probabilities if you touch the 0.7 fib at 95, which basically means if price moves up a little bit further to 95, the probabilities are higher that if you do continue a bigger corrective structure here, probabilities increase. It is going to be a more sideways structure instead of a very deep corrective structure. But you're still looking at corrective structures, still probabilities higher to take out that high, which is something I'm looking for. Of course, as mentioned, potential, you already have a finished structure and you're going to be looking for price to take the high out anyway. But that is the probabilities locally. Now, from a news perspective, we do have some news on Tuesday this week here, April 29th, also here on the 30th, and then on the 1st of May and 2nd of May. Wow, there's actually quite a lot going on. All the times that you see here are Central European time zone, so make sure you trade safe around these hours. Probably, especially on Wednesday and on Friday, you can expect some high volatility. What we see here is generally stuff that induces volatility on the chart. So please make sure that you trade safe and manage everything well and accordingly. I also like to say before I move into the probabilities that I will fly to Dubai tonight because you have token 2049 in Dubai and I will attend. I will fly tonight, arrive tomorrow. I will be there on the 30th and then I will be back on the 1st of May again. So the upcoming 2 days are going to be a struggle with regards to content. But on the 1st of May, I will do a live stream when I am back. So just so that you're prepared. With regards to the probabilities higher locally to take out the high over here. That's something that I am looking for. Either immediately look for the areas of resistance, of course, that I covered, or a bigger corrective structure. Conclusion is the same, so it doesn't matter. And there it stands. Take the high one more time. Observe resistances for a retracement to come. That is at the moment the highest probability. Both after a zigzag, you look for preferably a move to the downside and then a wave X. Alternatively, in a bullish scenario, you're going to be looking for a wave 2. So in both cases, probability is higher to then preferably take out that high, observe the resistances, look for price to move towards the downside, touch some of the support levels that we have lower here, like 84, 85, and then below this is 77, 78. So those are at least areas to also keep in mind. With a alternative scenario being that this is a multi 1-2, 1-2, 1-2, and you expect a very volatile, very steep wave 3 to the upside. But the probabilities for that at the moment are lower compared to a retracement. And the only thing, of course, that we can trade and cover are probabilities. So yeah, it's going to be an interesting week, likely a volatile week as well. Trade safe. Keep an eye on the levels that I mentioned in this particular video. If we move up and hit some resistance, wait for signs of weakness according to your plan, right? So that can be market structure changes. Maybe you see some candlestick patterns, bearish CVDs, RSI divergences, whatever it is that gives you confidence to look for a potential move to the downside. And I just highlight this because in the upcoming days, I'll be in Dubai and it's quite unlikely I'll be able to really upload content. For the silver members, however, I'll still be looking at the chart and provide an update in the morning. Different time zone, but it will be in the morning. So yeah, Hopefully you found this video helpful or valuable. On the left you see a video on the simplest way to use and trade Elliott waves without even counting. And on the right is the Elliott Wave educational playlist to help you understand more about Elliott waves. Thanks for watching and subscribing, and I hope to see you at the next one. Bye bye.